to welcome you to today's virtual lunchtime discussion focused on impact investing and the rapid rise of female investors. My name is Susan Murray and I'm director of the David Hume Institute, which is a think tank based in Edinburgh. And as a result of other research we've been doing, we've been undertaking some really interesting conversations. And one of those was with Jackie and Daisy Ford Downs, two of our speakers today. And another investor recommended that we get in contact with Suwen Chen to talk about the research she's doing at the University of Edinburgh Business School. So rather than doing this behind the scenes, we thought we would share those conversations and do an online discussion between the three of you and really have that kind of fireside feeling virtually and see you bounce off each other because you've all got different areas of expertise. And I'm really interested in the fact that 2020 has seen a massive rise in women investing. I don't know the data yet for Scotland. I think it's maybe too early to tell, but the stats look really, really interesting. So just a bit of housekeeping. We're recording the session and we will make it available on the web afterwards because we think it will be really interesting to some people that haven't been able to attend today. And rather than me read out really long biographies, each speaker will introduce themselves in their own words. And after the main discussion, we'll open it up for audience questions. So do get thinking about questions as we go along. So without further ado, I'll hand over to Suwen Chen to start us off.
Sure. Good afternoon, everyone. My name is Suwen Chen, and I'm a doctoral researcher at the University of Edinburgh Business School, studying impact investing and social entrepreneurship. I've also been working for Dynam Energy, a business angel investment and consulting firm, as their research assistant, which offered me opportunity to access business angel groups and do some due diligence work for them. I'm really looking forward to share my research this afternoon with you and hear about your insights in this area.
Brilliant. Do you want to screen share, Suwen, and then Jackie and Daisy can do their intros as they speak later after you?
Yeah, sure, will do. So, but this will be about my research and it will take 10 minutes. Should Daisy and Jackie introduce themselves first, or I can just continue?
So unmute, just continue just now, and then I think you can bounce off each other in a minute.
Okay, sure, no problem. I'll stop my video for the sake of bandwidth. Well, today I'm going to briefly talk about two of the things I've been currently working on: the golden triangle of investor readiness, which is a teamwork at Dynam Energy, and a gendered perspective of impact investing. Given the time limit, I will only be briefly touch those topics, but feel free to ask questions later or contact me after the webinar if you're interested to know more. Well, early stage companies are confronted with various challenges. One of the most prominent and problematic issue is usually money. How to raise initial funding to get started and how to obtain investment to boost growth. While entrepreneurs normally emphasize the great opportunity and the promising outlook, potential founders will naturally take a more pessimistic view and focus on the risks and downsides. They will only invest if they can reconcile those conflicting views and believe that the future reward is worth the risks being taken now. And this is the same case for both traditional and impact investors. Often one area of disagreement is the maturity of the business. Therefore, being clear about the current status and future development of the company is a high priority for entrepreneurs as they consider fundraising. With over 50 years of combined experience at Dynam Energy, we found that for a startup to be investable, it has to be ready in three key areas, as you can see on the screen: technology, business, and impact. When they achieve high scores in those three areas, we call they have obtained this golden triangle of investor readiness. Technology readiness involves IP, patents, product or software development, demonstrated technology capabilities, etc. Business readiness include business models, competitive advantage, governance, team building, and the route to market plan. The ever-pressing social and environmental challenges our society is facing today means that impact readiness is becoming more and more significant, and this is more the case for impact investors. This assessment should be based on the efficiency, intentionality, and measurability of impact a business produces. In order to have a more structured model to help investors make informed decisions, at Danone Energy, we have designed the golden triangle of investor readiness. And in order to decide the readiness level in each aspect, the enterprise needs to answer about 70 questions we have put together. And although an ideal investment would be a company achieving a high score in each of the three aspects, that is technology, business, and impact, we recognize that early stage startup companies are generally looking for funds to increase its maturity on some of the aspects. Moreover, different types of investors may have different focuses on each point. Therefore, the golden triangle has been designed to be a starting point for dialogue between the company and investors as they work together towards a common goal. As you can see on the screen now, there are 6 different possible shapes for this investor readiness triangle, which can be a starting point for a dialogue. And the investors and investees can finish the 70 diagnostic questions and then decide which areas they need to put more focus on. And the second topic I'm going to cover today is the gendered perspective of impact investing. Despite decades of effort to increase women's participation in the workforce, there are industries and hierarchy levels that remain unaffected by this endeavor. Entrepreneurial finance is such a sector. Here are some numbers on the screen. For example, only 3% of all investment was secured by female CEOs. About 5 to 10% of investment funds are managed by female managers. Less than 20% of women are in the top management teams in the asset management industry, and over 73% of women said they are most dissatisfied with the finance services industry for various reasons. And why this gender imbalance in the finance industry? Well, there are possibly several reasons, such as gender socialization and stereotyping. And what we find interesting is that compared with traditional investment industry, things are different in the impact investment community. For example, females in impact investing firms has a more significant representation at the top of the hierarchy. About 71% of Impact Asset 50 fund is led by women, and almost 40% of the top management teams are females. That's a much higher number than we can see here. There is also a growing sense of pride in having female colleagues in the impact investing community. For example, in the marketing email of this year's UK Ethical Financial Conference, it is specified clearly that 41% of the speakers are female, which did not happen before. And why does impact investing have a better gender balance then? Based on the study with 2 other colleagues, we categorized the contributing factors to this phenomenon into 4 groups called pink. Push and pull factors include favorable government regulations, company policies, and social pressure to promote gender equality. Some companies have the policy to have at least 30% of female senior managers. And in some countries, for example, Norway, there is a 40% female quota at the board level. I stands for intrinsic factors. Studies in psychology have shown that women demonstrate more caring and helping behaviors than men. People participated in our study also believe that impact investing requires more patience, interpersonal and communication skills, which women are probably better at. In addition, previous working experience plays a role in attracting women into this field of work. Need comes from the demand side of asset receivers, such as female social entrepreneurs, as their female counterpart has a better understanding of their business and its mission. Lastly, there has been an increasing in female clients from the supply side of asset owners, where the attraction of similarity applies. Several respondents recognize the positive role their female colleagues play in securing contract directly or provide a various support indirectly. Therefore, when predicting the future status of feminization in impact investing, we propose 2 possible scenarios. The first is the continuation of the current trend. where more females will join the impact investing sector and their status carries on rising. The second scenario is what we call the masculization of the gender niche. If impact investing becomes mainstream too quickly, the gender balance will be disrupted with fewer females to take the leadership role. And I'd like to get your thoughts on which scenario is more likely to happen in the future in later discussions. That's all for now. Thanks for listening, and I'm happy to take questions later.
I'm still on mute. Thanks, Suwen. That's fascinating. You quoted some stats there that I know I've discussed with Jackie before, which is one of the reasons we came together. And out of the Team Scotland research that David Hume Institute published back in October, that was when we really began to kind of unpick the data around how businesses get started and how they get money and then how they scale. So I think that's a really good point at which for me to hand over to Jackie and talk about the work that you've been doing.
Thank you very much, Susan. And thank you, Suwen, for a super presentation there. That was really excellent and stimulating information that you've given there. And I relate to so many of the points, actually. It's wonderful. So, sorry, yes, in terms of introduction, I'm Jackie Waring. So I'm founder and CEO of Investing Women Angels, as the name would suggest, an all-female business angel group here in Scotland. And also our sister organisation, Accelerate Her, as that name might suggest, all about helping to accelerate female founders in their mission to scale their companies and in many cases to on the road to investment as well. So yeah, lots of touch points with what you were discussing, Suwen, and you know, in our own right, I guess it's fair to say that, you know, we're a purpose-driven organisation ourselves. We're trying to create impact within our own arena and create some of the change that, you know, clearly your work is focused on, seeing that positive impact and that, you know, in our own environment, changing the face of angel investing and women's participation in that whole the whole community. So both sides of the equation, both as investors and female founders accessing investment and unlocking that economic potential of women, which is so important, not just the economy, to our society. And so it's very much what we're about. We're absolutely trying to see the change, you know, in both sides of the equation that you were showing earlier, Suwen, and you know, very much recognizing the echo effect, which we've seen very strongly represented in statistics from the USA in particular, where if you increase the level of female investors, you will see pretty much parallel increases. And then I think there's a tipping point where actually the female founders overtake even the level of investors. I think they've gone beyond that now in the USA, and I hope we will too eventually here, where you know, you see these similar statistics of female founders that are succeeding in getting the investment. So yeah, I don't want to use up too much time on an introduction just now, rather in the conversation. So thank you very much. I hope that's just a brief background on us at Investing Women Angels in particular. Thank you.
Thank you, Jackie. Now, Daisy, when we spoke, you completely opened my eyes to VC just being one mode of investing, and then started using words like zebra, which I'd never heard used in terms of investing before. So do you want to tell us a little bit about some of the other things we've maybe not touched on so far?
Sure, and thanks, Susan and Jackie, and thank you, Suwen, for that presentation. I think that's really going to help us to have a great conversation of so many interesting points there. So by way of introduction to me, I wear a few different hats. I am a social investor at a fund that invests in social enterprises in areas of multiple deprivation in Scotland. I am also the chapter leader for Scotland of Zebras Unite, as Susan mentioned. And Zebras Unite is a global movement of people and entrepreneurs who are building businesses outside of the venture capital paradigm, which is all about building unicorns, which are billion-dollar valuation businesses. But we don't think that those are the only businesses that deserve to get funded. And so we're working on building the support and the community and the capital instruments that can help to build these zebra companies in a different way. And my personal interest in this is about how we can use different financial instruments outside of the rather narrow range that we use now to help entrepreneurs solve problems, rather than startups building their companies around what will get funded. How can we design financial instruments that enable more problems to get solved? And in turn, how does that invite more people to participate in entrepreneurship and investment by doing things slightly differently in a way that speaks to different markets and different people's experiences?
Do you want to say a little bit more about what those financial instruments might be?
Sure. So at the moment, typically when people talk about startup funding, they generally refer to venture capital, which is about institutional funds. So in big institutional money like pensions and endowments give their money to a venture capital fund who will try to essentially over 10 years beat the market and return 3 times that investment to those investors. So a venture capital fund is all about returning that money. And so they make big bets on startups that they think could potentially be massive, but there is a huge amount of risk involved. So they might expect that a lot of those will fail, and they need the ones that do well to do really well, like Facebook, Google, Amazon kind of well, to return that money and to have an exit, which might be initial public offering, float on a stock exchange, or an acquisition by a larger company. But obviously this has various incentives in it. It means that if you don't have a big giant billion-dollar market to aim at, it's quite difficult to perhaps get that exit or grow your valuation that large. And particularly if you're focused on impact as well, funds can feel that your growth isn't your priority. So we might look to different instruments that, for instance, don't rely on an exit to return that money, but return it from, say, a percentage of revenue over time. And when impact comes in, we can also look at blended investments, which involve blending a certain amount of private investment that expects return and a certain amount of philanthropic grant money as well, which is looking for that social impact that you get at scale with technology-based startups. I should also mention I'm also a scout for a venture fund. So I do believe that venture capital can help a small niche of businesses that can grow really big. And it's all about making sure that underrepresented founders have access to that cash, because as we've talked about, there's only a very, very small proportion of women and people from marginalized communities that will receive venture capital each year. So also working from that side as well.
Jackie, how does that fit with Accelerate HR and the kind of women coming through that scheme?
Accelerate HR, yeah, it's thank you for that. It's fabulous what Daisy's doing, and I think great to see such innovation in a space that's so much needed. It's so difficult for the usual financial instruments to work in the kind of space that Daisy's going into. It's brilliant. So yeah, Accelerate HR. Really interesting, because we've, here we are in one of the most, well, if not the most challenging year ever for everybody. And we've just seen an explosion of activity amongst female founders on one level or another. And, Accelerate HR, we literally on Friday night at midnight closed this year's annual awards that we do. And it's all about profiling and making highly visible these phenomenal female founders in really interesting sectors, many of them, having impact in what they're doing. And we saw a 70% increase in participation in the awards this year, which has been amazing. And all of the activity that we've got behind that, boot camps, events, helping those female founders to start to get in investment readiness, and some of the areas that Suwen's touching on, working with them to try and help them there. Probably about a 300% increase in activity, and I think that's had an awful lot to do with being going digital this year, and we've all done that out of necessity. Some of us were doing quite a bit there already, but now everything has been digital, and therefore we've learnt a great deal about accessibility and how important that is for for female founders, for many people, but for female founders, and in particular, juggling many things. But it feels right, a lot of the points there about the motivation of both female founders and I think the vast majority of our female investors as well. We get way more excited by the companies that have some positive impact. That can be very wide. What that social, societal, health impact perhaps might be, but those are the companies that I know that our members, and I know there's a couple of our members, I think, with us today, so I'm quite sure they'd vouch for that. And those are the companies that we just love to see the most. And I'm really happy to say that a huge percentage of them are led by women, or at least co-founded by women at the very least, and many of them in scientists and really amazing founders. And so for instance, our investment today, 81% of it, we've invested into female founders, even though our investment does go wider than that. But and they often are those founders that they're making a difference in what they're doing in their companies. So I think it's a really interesting space with potential for much more activity, amongst women on both sides of this equation.
Brilliant. So I'll open it up to questions. So please do post your questions in the chat if you have anyone for any of the panelists. I'll keep talking otherwise. So if you want to stop me talking, then please do post your questions quicker. I'm interested in Suwen's graph that you put up towards the end about perhaps we're at a tipping point about the growth. I don't know, are you able to screen share that last graph again, which was quite fascinating?
Yeah, sure.
Side by side. And I wonder, what did Daisy and Jackie feel about, are we going to get to a point where we're thriving in Scotland and we've got much more balance? Do you want, actually, Suwen, do you want to talk about the graphs in a bit more detail, and then Jackie and Daisy can come in if they've got anything specific?
Yeah, sure, because based on the current trend, it seems that impact investing is having a better gender balance than the traditional finance industry. So we are proposing that if this trend keeps, then there will be more and more female participants, and we can actually have a better gender balanced finance industry in general. So that would be scenario one. However, there is also a scenario two, because if it becomes mainstream too quickly, and we do not have enough female talents or female entrants into this sector, then the male ones will still be dominating in the leadership role. That would make the current trend into the downward trend. Yeah.
Brilliant. So one of the things we haven't got here today is any of the big investment houses. And I know they've been putting a lot of work in to increasing the number of females in investment management. And one of the reasons we were doing that is mainly so that we could focus on this bit of businesses created by women and invested in by women. And I wonder if is there a trickle down effect coming from the big investment houses having, maybe taken the steps towards employing more women in investment management? Who wants to answer that?
I can't really talk on behalf of the bigger investment houses, but I do recognise what you're saying there, Susan. I believe there probably is. I don't know what the statistics beyond those we've heard, look like there, but I imagine there's huge drive for more female participation at senior levels there. But within our own area of influence and ability to have an impact. Certainly, starting to see a movement of the dial there with female participation, both on the investing and the investee side of the equation here, and very much I'm talking about angel investment. So that's obviously it's not institutional. This is, we are a group of individuals effectively as a group who invest in the founders. And those relationships, of course, are very close as a result of that. And I think that, one of the massively encouraging things that we're seeing is that now seeing many more female founders coming through in Scotland who, are succeeding in getting that investment. So I actually suspect, without knowing the statistics, accurate statistics for all of the other angel groups, but I actually suspect that already our female founders in Scotland are ahead of the curve, in terms of the percentage of female investors. So that's now starting to increase, never as fast as I'd like it to, but we're getting there. But the female founders, for instance, out of 10 investment transactions we've done ourselves during 2020, 6 of those were with existing companies we were already invested in, and 4 of the 6 female co-founders, and the 4 new investments which happened during COVID, all of them female founders. So, starting to see that movement now, and I do believe we were estimating that the angel community in Scotland is roughly, about 6% female angel investors. That is starting to speed the increase there now. And if that sounds woefully low, we reckon it was 2% when we started, so it's still 3 times what it was. So as you can see, a real need for movement there. But on the percentage of investments or new investments this year in Scotland and at the angel level, I don't know the absolute statistic, but I reckon I'm guessing it's probably a good, even be 25% of new investments in Scotland. I am estimating, not sure, but from the ones that I know, that's quite possible. So that definitely would suggest a good movement in the right direction there. So one we want to see more of. And I guess that's kind of more the in the mainstream area. But like I say, a lot of those companies are having real positive impact in what they're doing. So let's hope that gives hope for Suwen's 2 scenarios, that we're actually looking at scenario 1 and the one that we want to see there.
Yeah,
happening now.
I think as the year closes and the stats come in, I think we're going to see dramatic change this year. And we've got a question in, we've got a couple actually, but I'll take Alistair Ross first. He says, it sounds as though 2020 could be a breakthrough year as COVID-19 has forced a rethink of old ways of doing business and investing. You no longer need to be walking into the City of London boardrooms to pitch, for example. Is that right? And how can we build on that going forward?
I can take that one for just a couple of points. I think that absolutely is the case, but it's on us to take the best of what we've experienced this year and hopefully leave the worst behind. But the best has been the way that we've all been able to come together, and geography really hasn't mattered anymore. I know of entrepreneurs who have got in front of Silicon Valley investors just because everything's on Zoom now. So so the same applies to everywhere in the world, not just London. So we do have that ability to transcend geography and talk about not only global investment but global impact from wherever you are. And I think we do need to be intentional about taking that forward. Just reflecting what Jackie was saying before, I think in Scotland we have this opportunity to try and stay ahead of the curve because we are a smaller country. Hopefully we can be a bit more agile, and it's amazing to hear that Jackie, your work, you have tripled the number of angel investments, women angel investors. That's just incredible, and testament to the amount of impact that a person or a group of people can have when they're being sort of really intentional and really visible about making change.
So just thinking about trends, I'm really struck. We had a conversation with Cristiano from Pawprint recently, and he was talking about how you get investment for the things that you can't measure or that you haven't worked out how to assess the impact for. And he told a story, I'm paraphrasing, so I hope I'm getting this right, Christian, where when they went originally to pitch to the investors in London, they didn't have a deck of slides. They didn't have their playbook sorted, but what they had was a concept, and they got investment for that early mover advantage. Now, I know that's a kind of an area you've been thinking about, Daisy, in terms of how do you do funding that maybe is more flexible and you know, ready for those new opportunities that might come, and yet we can't really imagine them all yet.
Yeah, I think it takes the whole of the ecosystem that is around investment and entrepreneurship to actually look at this and work together. I mean, if one person sort of starts something but other people don't pick it up, it can be lost quite quickly. And I think Christian is quite lucky. You generally only hear from white men that they were able to go and raise without a deck or any kind of traction. So there still is, I think, very much that bias apparent in the system. But if we can come together and identify what the gaps are, what are the needs of our entrepreneurs, you know, how much investment do they need? Particularly now, I don't think that many businesses need quite as much capital as they used to. We've seen quite a lot of bootstrap success, people able to do a huge amount, very little. And that's particularly true of women-led businesses. They generally tend to be very capital efficient, just through necessity, because they have been unable to raise. And you can only imagine what they would be able to do with some investment. Mm-hmm. So if we can design, for instance, those financial instruments that can be patient, can enable people to build whilst retaining control of their businesses, and that's particularly important for impact-led businesses where they want to prioritize making an impact perhaps over other things. And I think, as I said, if we can identify where those gaps are, because we can pontificate, but I think it goes to speaking to the entrepreneurs and speaking to the investors and finding out where they align and saying, what can we do for both of you that enables you to work together in a different way? And for investors, that, you know, if they're not looking for an exit in 10 years' time, maybe they want to get some of their money back earlier. Can we look at how the business could pay off through revenue if they're building a business that can quickly develop strong revenue streams and high margins? So I think that's a potentially exciting way to go, but it takes getting everybody in a room and actually pulling together. Hopefully, as I said, we can do that in Scotland and be a bit agile about this.
Or a virtual room, if we're
yeah. At the moment, it's still a virtual room.
So I think that conversation links more with Wendy's, and we'll come back to Poonam's question. So Wendy Lamin has said, we love the focus on women, and she obviously is one, but she's put another one now, but what about diverse entrepreneurs? Now, I know you touched on that for the fund that you scout for, Daisy, so I'm not sure if that's best coming to you next, or but there's another PEVC boards in Scotland are white and male as they invest in people who sound and look like them. And you touched on, I can't remember the term you used, but the similarity of who you choose to invest in, Suwen. So I'll leave you.
Homophily, yeah, that's the word.
I'm not sure who wants to start on that question.
I can jump to the question about diverse entrepreneurs, because I actually read a report last month saying between 2009 to 2019, only 0.24% of venture capital went to a team of Black entrepreneurs. That's 38 in total over that 10-year time. And out of the 38, only one goes to female leader. So over 10 years time, the Series A funding, only one Black female-led fund got the money. That's a very shocking number. So I think that's absolutely right. We need to also pay attention to the intersectionality of the gender and other types of ethnicity, as Wendy is mentioned here. Also, as someone from Asia myself, this intersectionality is what I'm interested in knowing, and I think we should definitely pay more attention in this area. And as to the second question, yeah, that's sometimes how things are, and I believe things are changing at the moment. So one possible thing could be done is, as I mentioned in the pink model, maybe company policy regulations, to put some hard regulations there. Well, could be a downside, because we need to judge people by their capability and their merit. rather than their color or their ethnicity. But sometimes we may need to overcorrect things to make things back to the balance.
I really agree with Suwen on that point. I think that it's so much of this has got to do with the visibility of the founders and creating your own networks, basically, to break through any bias that might be their unconscious bias or otherwise, and then making highly visible platforms for those great founders that are doing amazing things from every angle of diversity, really. And it is about making them, well, again, it depends on the financial instrument. I mean, as you know, Daisy's doing that great innovative work there to have more creative use of the financial instruments. I mean, thinking just in our current, shall we say, need to look for some level of returns, although that can vary, or people's aims there can vary quite a bit depending on the on the impact and how much that means to them, but within that kind of framework, if you like, it's probably work, a lot of work to help those founders get really good at how what they do is presented very effectively, and then create these platforms that give them that high level of visibility and really work hard to get them in front of the right kind of investors that look at them as a good business proposition, and that's all that they see is this is a good business, we like what they do. For those that are seeking returns, the return possibilities are there, and they're really investment ready from all of the angles that Suwen spoke about. So I think that's largely what we've been doing, obviously focused on female founders there, and it is definitely working. So you can see that coming through in the statistics. So I guess we're looking at the same kind of approach in terms of that visibility, and this is where the inclusiveness of going more digital now, as Daisy described so well, it's just removed these barriers. So not even just the geographical barriers, the access to people barriers, because we've made it so much easier now. So I think we need to really embrace that and work hard at creating the right platforms for people to be seen, and using our own networks, our networks within our groups to give people that access and really help them get there.
And do you think the rise of females, or the data showing the rise of females this year, is partly to do with that visibility, but also maybe partly to do with people having more time to look at options, or the rise of crowdfunding and people being, they could put in little bits of money without actually, maybe the idea in the past is you've got to have lots of money to be an investor. And
Sorry, Susan. Absolutely right. I mean, lack of knowledge has been one of the biggest barriers for many women getting involved in investment of any sort. And, not having been exposed to or being part of networks that introduced them to that, has been a really big part of it. Not really being part of the conversation often when it comes to looking at financial advice as well, that this is also an option for what you do with your money. And I think crowdfunding has done a lot actually to help change there. And I mean, we've got current experience of that right now with Crowdcube is an equity-based platform, and one of the companies that we're invested in is using that as part of an overall investment strategy, and it's working really well. And some of the people that are getting involved there, and women getting involved there, wouldn't have necessarily felt they were ready to potentially even to join an angel group at this point in time. And it's perhaps a stepping stone, and absolutely fine if people stay in that spot and that's all they do, but it may also then build the confidence and the awareness and the knowledge to then start to look at, well, where else can I make a difference? Can I get involved? Can I increase my own both impact in what I do and also wealth management, so for more women actually finding different ways to increase that for themselves. So yeah, I do think that the equity-based crowdfunding in general, but equity-based crowdfunding, and we have some really good platforms here in the UK, are working well to help that change, and just high visibility and access to knowledge and networks is what's helping to accelerate the change, I think.
So there's a question from Poonam. Are females more likely to invest in impact investments?
I'm sure Daisy possibly has a view on that. I could comment on that, but I can go after Daisy or someone else if you like. But
I'm afraid I don't have the stats on that. I mean, instinctively, I might say yes. Just sort of reflecting on crowdfunding, we know that generally women do better at crowdfunding, and they're more able to articulate impact through crowdfunding. So I would suspect the reverse is true, that women may be more likely to invest in that. And just reflecting on crowdfunding, what Jackie was saying is that has been an incredible revelation in showing that change is possible in how we do investing and how we diversify and democratize who makes the decisions on what gets built, because that means whose problems get solved. So I think that is a real a cause for hope in changing those all white male boards in VC and PE that we were talking about, to show that different types of people make different decisions and have different experience of markets that may be huge, that homogenous boards may overlook. Sorry, went off topic a little bit there.
So I think it's very interesting, and I think again, when we were all last together at another excellent session that Susan hosted for us, we were talking about, well, the definitions around impact investing, and I mean, so I'm not using any pure definitions here at all, but just looking at our earlier point about what excites women in our group the most, it's definitely the companies that are having some positive impact in whatever way that's measured. We like to feel that it's not just investing for return, that's much more than that, that it's you're making a difference, you're helping make the world a better place in some way or another by the companies that you get involved in. And personal view is that those are the companies of the future anyhow, and the companies that will do the best in the future, as consumers are far more aware now of the footprints that companies are leaving, be they environmental or whatever other measure they're much more conscious about choices being made, and the demand for services, products, whatever it is, will increase, I think, for the companies that are doing something positive impact there. And a lot of cynicism about those that say one thing and do another. They're not following, they're not being true to the stated values, and I think that people are actually hugely aware of that now. It's not something that's buried somewhere, it's very openly discussed now. So yeah, I think what we see is and I'm not comparing this, I haven't got statistics against others, but I think it feels right to me that women are quite inclined to want to put their money where there's going to be an impact, a positive impact. So I would guess that the statistics will show that there's more, that's a good area of activity amongst women.
Mm-hmm. So when you are working with Dunelm Energy and using the golden triangle, how do people react if they haven't thought about their impact before? Or has everyone thought about their impact before?
Because a majority of our investment are in the energy sector, so renewable energy, so they at least have some environmental impact already. So I would say almost all of them have thought about environmental impact. And what we are helping them is that to think of some of the social impact they can creating. Because even if they are creating some social impact, but they may not be aware of it, or they may not be able to frame it properly, or they may not invest enough resources in that area. Yeah, so we are enhancing their impact generation, yeah, to a certain extent.
So no one turned around and said, I don't want to do this, I just want to do my energy.
No, I don't recall I see anyone like that in my 2 years time with them. And yeah, and we can see the trend even with some business angel groups, because we are a member of some business angel groups. There is an increasing interest into environmental and social impact. And one of the angel group is actually thinking of having an exclusive pitch night for social enterprises or sustainable startups, whichever name we give it to it, because there are so many different names. Yeah. So we definitely see the trend of more emphasis into this area.
So Jackie, you touched on awareness, and we've talked about if Scotland's traditionally known for being quite a shrewd country where you've got to kind of prove your worth before you can unlock money, and maybe paraphrasing and stereotyping, all those things. But I'm wondering, we mentioned Crowdcube and other online platforms about how people are beginning to put their toe in the water and maybe invest money in ways that they might not do through a formal investment broker that might have been there before. And I'm kind of wondering, we did a talk in partnership with Weevolution looking at how share ownership had transformed in Venezuela, and it had really transformed people's mindsets to do with saving and investing, and the power people felt to bring change through actually owning a bit of a company. And I wonder, what does we're right up against it in terms of time, but I'd be really interested to know what speakers thought about, is there potential for that in Scotland, and do you see that happening?
Yeah, I think there probably is. I mean, I think that change of mindset, definitely comes with the territory, and however small a start, because as to feel that you are connected to the organization that you are investing in, even if it's a teeny bit of it, and that you can even, you can communicate directly with them, that you can, even influence and help the company, depending on, the shape of the investment, is massively empowering on every level. And people get really excited about it. We love it, and the fact that, I mean, we've got probably the most generous group of individuals ever in the angel group, who are so proactive without being asked, at wanting to try and help the founders that we see, whether or not we're, actually going to be investing in them. Sometimes it's way before that, but, giving a lot of time, and feeling that, we want to help, and then, when it does follow through into investment, it's enormously rewarding, because you feel that, that not only you're doing something with your own money, but you're actually really working with that founder, that company, you're helping in some way, and that all of that, I think, feels really good. So I can see that there really could be more opportunity for, what you were describing there, Susan. Yeah, absolutely.
I'd just pick up, I think this has a parallel, or at least a prototype in community investment. We've seen a lot of community share offers in Scotland, where local communities can buy into their, like, a local renewable development energy project, or a community pub or community shop. And there's very much a sense of, when people buy a share in that local asset, that they feel more connected to it. They have an emotional as well as a financial investment in it. And though it might be quite a small investment, I think that helps them to feel that connection to, I am part of this community, and I own part of it, and I want it to succeed. And I think you can see that reflected at the sort of less local level as well, when people feel connected to what they're doing and what they're investing in.
Yeah, definitely. I think just watching the Energy for All share offers over the summer, despite the lockdown, and despite the fact that some people are going through some really hard times, other people's disposable income has gone up, and Energy for All offers have all been massively oversubscribed. So I think it's good news for the communities that are able to attract those resources in. Suwen, have you got anything you want to finish off the session with, that you haven't managed to squeeze in yet?
Sure, just a note from my own experience. I think I would encourage everyone to become business angels. Yeah, well, I plan to become one once I graduate from the PhD and I got a job, because actually the threshold of become a business angel is not as high as we thought. Because before I joined Dunelm, I thought you have to be a millionaire or billionaire to become a business angel investor, but that's not the case. So yeah, so I would really want to see this impact investing industry get democratized and get more and more people joining this area, because we can all make a contribution together, no matter how small each of us as individually. Yeah, that would be my final thought for today. Yeah.
Brilliant. Any more final thoughts, or do we think we're a wrap and we'll let people off a couple of minutes early? Right. I think that's a brilliant sense to leave us with. Daisy, you mentioned democratization earlier, and Suwen finishing it. I think it's a phenomenal opportunity for Scotland. And I think earlier in the year, it really had my eyes open to the amount of money that might be in the system, just looking at the data for the amount that was invested in premium bonds during the month of May. It was something like 1.2 billion. And you think, what would have happened if that 1.2 billion had gone into impact-driven companies? You know, would we have got more than just a gamble? And I wonder if there's more that we can do by actually talking about how easy it is to invest in companies. And yet there is risk, but there is also, you know, potentially great returns out there. And hopefully we've encouraged a few people, although I can see from the chat that actually a lot of people on the chat today are already investors, so have probably got some interesting companies and stories that they could tell us too. So thank you everyone for your time. We really appreciate it. Normally we would clap, but we can't really do it virtually. So yeah, really appreciate it. Daisy, Jackie and Suwen, thank you ever so much.
Thank you, Susan, a pleasure.
Thank you.